What's up, everybody? This is Investing Sensei here to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 every single week. So definitely going to be exciting, guys. In this video, I will be going over the second one in the list, which is CNI. I'm not actually going to cover AQN right now because they did do a dividend cut I believe this past month, and it actually has not reflected on Seeking Alpha yet, so we're gonna go on and do the next one, which will cover the stock price of the company. We'll read a little bit about the company profile, and then we'll jump into the numbers and pull up the calculator, crunch some numbers, and then we'll wrap up the video with looking at the dividend yield. That'll show us when the best opportunity was to buy the stock, or if it is currently at a good buying price for the dividend yield in general. So CNI. We're going to actually pull up Seeking Alpha. You'll see CNI. It stands for Canadian National Railway Company. Currently trading about $117.40. And then if I pull up the company profile here, we can read a little bit about them. So Canadian National Railway Company, together with its subsidiaries, engages in rail and related transportation business. The company offers rail services, which include equipment, custom brokerage services, transloading and distribution, business development and real estate and private car storage services, intermodal services, including temperature-controlled cargo, port partnership, transloading and distribution, logistic parks, custom brokerage, trucking, and moving grains in containers. They definitely do quite a bit here. They are considered to be in the industrials sector. Industry is railroads. Employees are showing up to be 23,971 employees, and they've actually were founded back in 1919. You know, that's quite a long time here, and you'll see the website. You can actually see a little bit more about the company at www.cn.ca. So check them out, guys. If I pull up here the actual performance here for this company, you'll see that year to date they're actually only down 1.49%. If we look at the 1 year, they are down about 4.34%. At the 5-year mark, they are up 56.30%. You'll see that on the 10-year, they are up 134.66%. And then the total year since they've been publicly traded, or as far as actually Seeking Alpha goes, they are up 3,840.70%. Quite a huge performance there. Let's see how far this thing goes, all the way to about 1996. If we look at the 52-week range here, the 52-week low has been $103.79. 52-week high has been $137.19. It's trading right around the center of the 52-week range. If we look at EPS, it's 5.84. PE is 20.22. Dividend rate is $2.25. Yield is 1.91%, and then the market cap is a 78.96 billion market cap for this company. Pretty sweet there, guys. If I pull up here the dividend scorecard, again, they are in the industrial sector. The dividend summary in general, you'll see the dividend yield is at 1.91% at the lower range. But if we look at the annual payout, they do pay out $2.25. So for every share you do own of this company, you would get annually about $2.25. Payout ratio is 38.21%. Very, very low payout ratio. Huge room for growing the dividend in the coming years. 5-year CAGR is a double-digit 5-year CAGR, which is a 12.06%. Definitely kind of the stuff that I love to see. Dividend growth, it's only showing 1 year. Again, Seeking Alpha has been known to have this value incorrect, so let me know in the comment section if you know how many years they have been growing the dividend so far. Dividend frequency is quarterly, so they do pay out about 59 cents every single quarter for every share you do have. And yeah, that's about it. Let's go ahead and pull up the calculator, and we can start crunching some numbers here, guys. So the first one we are going to find out is how much of this company do you need to have invested to make $1,000 a month. I think that would be a super awesome goal to have. So we want to make $1,000 every single month. There is 12 months in a year, so you'd multiply this. So annually we need to make $12,000 a year. So in order for us to find out how many shares we need to achieve this, you're going to divide the 12,000 divided by the annual payout, which is $2.25. This will give you the total number of shares you would have to own to achieve this. So that is 5,333 shares. You could actually go up here at the share price, multiply that a number of shares times the $117.40. This will give you the total amount of money you'd have to have invested currently at the time of this recording. So you'd have to have about $626,133 invested in this company at that current share price, and you would be roughly making about $1,000 every single month. Pretty sweet goal there. Quick way to calculate this actually is you could take the 12,000 you need to make annually, divided by the dividend yield here, and you'll get a rough estimate. So you'll see we get about $628,000. That is a pretty sweet way to do the calculations or get a rough estimate. Let's do the next one, which is we want to make $100 every single month. This one's a little bit more achievable because you do require a lot less capital. So we want to make $100 every single week. You can divide that, well, I guess not divide it, but multiply it times 12 because there's 12 months in a year. So in total, we need to make $1,200 annually. You could actually take the previous answer we got from the $1,000 a month divided by 10, and you'd give the results. But since we do have the calculator, we do want to crunch those numbers, see what we get. So divide the 1,200 by the annual payout to get a number of shares we need to own. So we would have to have about 533 shares, and then you can actually come in, multiply that times the current share price, and you get roughly about $62,000, almost $63,000 that you'd have to have invested in this company, and you'd be roughly making about $100 every single month. Pretty cool there, guys. Again, quick way to calculate this: 1,200 divided by the dividend yield, and this would give you roughly about $62,000 that you'd have to have invested in this company. Let's go ahead and do the last one, guys, which is how much of this company would you have to have invested to make roughly about $100 every single week. I think this one would be very, very awesome. So every single week you'd come in, you'd get a dividend or $100 from this company. Definitely my goal eventually to get with some of the companies I am invested in my dividend growth portfolio, but we want to make $100 every single week. There is 52 weeks in a year, so you'd multiply that. So annually we do need to make $5,200. Divide this by the annual payout, and this would give you about the total number of shares you need to achieve this. So about 2,311 shares. You can multiply this times the current share price, and this would give you about how much you'd have to have invested. So roughly about $271,000 invested in this company, and you'd be roughly making about $100 every single week. Pretty cool there, guys. Again, quick way to calculate this is take the total that you need to make annually, so that's 5,200 in our case, divided by the dividend yield, which is right here, and you would roughly get about $272,000 invested in this company. pretty cool, guys. Let's go ahead and wrap up this video by looking at the dividend yield, see when the best opportunity was for this company, or it might actually be right now. So let's go ahead and jump over there. Alright guys, so we're here at the dividend yield. You'll see right here, this is the dividend yield. It does fluctuate over time, so the higher the number there was the best opportunity when to enter the company if you're basing it off the dividend yield. So you'll see most of the companies we do cover in this series, they typically all fall under the March 2020 crash. Was the best opportunity to pick up some of the best companies here. But you'll see that in 2020 it did trade around a little bit less than 2%, and slowly it's been recovering. The dividend yield has been going up, and that's potentially because the share price could be going down. We will see what happens there, guys. But yeah, this is CNI. Let me know in the comment section if you do own them, if you're investing for them in the long term. And let me know any new companies you want me to cover. I'll be happy to add them to the list. And don't forget to subscribe with that bell notification. We're trying to get to 20,000 subscribers, so definitely help me out. As well, drop a big thumbs up on the video. Definitely would appreciate it. I will talk to you guys later. Take care, stay safe out there. Bye guys.